Let me give you an idea of what I have found to be the biggest motivator to learning how to become a proficient stock market investor. Now, we've thrown the 12% number around already. We believe that once you've learned how to correctly invest in stocks, that you will have the power to realize annualized 12% returns going forward. But what does that really mean in real dollars for your savings and for your retirement years? Being able to earn 12% returns has enormous impacts on your savings and your retirement. Sure, 12% is not going to make you rich in 1 or 2 years, but the truth is, unless you take enormous amounts of risk, or you get lucky or inherit some assets, nothing will make you rich in a year or two. But 12% returns will if you have enough time. And if you're looking at retirement already, well, 12% returns will enable you to withdraw so much more from your existing retirement accounts starting right now. Now let's take a look at some calculations. Don't get overwhelmed by any of the calculations here. This is to motivate you and to show you what's possible. I'm going to walk through some savings and retirement calculators that we highlight in our retirement course. Now here's the savings calculator. You can access it at mycalculators.com, of which we have no association. We just really happen to like their calculators, and they're free. You've seen this one already. You can solve for any of these 5 inputs. We'll use it here to show what kind of numbers that 12% returns will enable you to calculate over time. And you can do any of these calculations for yourself as well. So let's start with an account of, let's say, $100,000. And let's assume that this person is 45 years old. We'll also assume they have about 20 years left until they will retire. The market average of around 5.5% will turn every $100,000 that they currently have saved into about $292,000 20 years from now. Now, this doesn't account for additional savings. So they'll most likely turn what they have into a little under triple that in the next 20 years before they're hoping to retire. This is by taking the traditional financial path. Now, going to the retirement calculator, we'll be able to see what that gives them in retirement income. We'll plug in 20 years until retirement. We'll assume this person will live 20 years in retirement. And we'll use a growth rate, called interest rate here, of 5.5%. We'll also use a 3% projected inflation rate. Now, we saw from the first calculator that they'll have about $292,000 accumulated for every $100,000 that they currently have in savings. And we're going to leave this figure at 0. Solving for how much they need to live on annually, it shows that this individual will be able to withdraw about $10,000 each year in retirement for every $100,000 that they currently have saved up. Whoa, now that's not very much for someone who seems to have a decent amount already saved up. So what happened? Well, it's because they're not earning a very high return, about the average minus fees, and the inflation is constantly eating away at their money. Now that $10,000 is inflation adjusted, so this really means that they'll be able to withdraw the equivalent of $10,000 in today's dollars for every year during retirement. $10,000 in today's dollars will actually require a much larger withdrawal in 20 years. In other words, $10,000 in 20 years will not be worth the same as $10,000 is today. But let's now assume that they learned how to become a good stock market investor. And let's change this up a little bit now that this individual can earn in excess of 12% returns. Just by changing this interest rate to 12%, this individual will now be able to accumulate about $964,000 by the time they retire, that same 20-year period, for every $100,000 that they currently have. This is a huge jump. And moving over to the retirement calculator to see what kind of annual income that can provide them with in their retirement years, we'll leave everything the same except now they can get 12% interest, and they will have accumulated $964,000 at the time of retirement. So this turns the previous $10,000 that they were thinking they would have each year in retirement into over $52,000. Remember, that's inflation adjusted, so it means that they can withdraw the equivalent in today's dollars of about $52,000 per year. Now, this is for every $100,000 that they currently have. So if they have $200,000, you could double this withdrawal number. Now, this is enormous. This can change your quality of life. what about someone younger? A 30-year-old maybe. A 30-year-old might have around 35 years or so to accumulate before they're ready to retire. So if we start with a $10,000 account instead of a $100,000 one, and if we assume 35 years left to invest at an industry average interest rate of 5.5% and about $300 in savings per month, they could turn that $10,000 that they currently have into about $435,000 by the time they retire. Now, this doesn't seem too bad until you realize that is money 35 years from now. $435,000 will buy you a lot less in 35 years than it will today. Going to the retirement calculator and plugging in 35 years until they retire and moving this back down to 5.5% interest rate, we'll put their accumulated account of $435,000 here. Solving for how much they'll have to live on annually, it shows $9,615. This is not all that great when you consider this is someone who started investing and saving early on. But again, it's because of the low interest rate and inflation. 35 years from now, they'll need a much larger account size to account for the steady decrease in buying power of their currency. Let's see what happens for them if they can earn 12%. Just by changing the earnings rate to 12% and leaving everything else the same, this 30-year-old can have a future account balance of over $2,165,000. Now, this is quite a difference. Let's see what this does for them in retirement. Changing the earnings rate to 12% and putting their revised account balance of $2,165,000 in here will solve for how much they can live on annually. And this number takes a huge jump up to $76,000 that they're able to withdraw per year, adjusted for inflation. This power is just crazy. $76,000 per year versus $9,000 per year. Now, what about if you're already in retirement? Well, let's take a look at a 65-year-old couple who has accumulated about $300,000. Now, they're no longer in their accumulation years, so we'll look at the retirement calculator only. Now, their accumulated amount will allow them to withdraw more each year than the first couple of examples because they're starting to withdraw right now, so inflation eating away at their money will not have nearly as large of an impact. They have 0 years until retirement because they're already retired. They expect to live about 20 years more in retirement, and let's assume that they can get the average of 5.5%. Well, with a $300,000 account size, this will allow them to withdraw about $18,000 annually for the next 20 years. Now, keep in mind that this is in addition to Social Security or their government's retirement program, as well as any employer pensions or additional retirement income. So the traditional route of giving their money to someone else to manage will allow them an additional withdrawal of about $18,000 per year. If they could bump their earnings rate up to 12%, however, then this withdrawal number jumps to almost $30,000. This is quite a significant jump when you consider this is per year for the next 20 years and starting right now. How many of you would like to have that additional $12,000 or so income during retirement? Okay, I think you get the picture. We've been through the numbers and you can see the results. The bottom line is learning how to realize returns like this can solve many of your savings and retirement problems and questions. And obviously, earning even higher rates, like 15% or so, can allow you to realize even your greatest dreams and potential. I hope this has motivated you and shown you how important learning how to do this really is for you and your family's future. Help yourself learn how to do this and help others learn how to do this as well. Show your friends and family these calculators and this course and see what kind of results and numbers you can achieve for yourself. Thanks for being here, and I hope none of that was too overwhelming or technical for any of you. That's about as technical and math-oriented as we'll get in this course, so you don't need to worry about that anymore if it has been hard to follow.